I heard one of my real estate agent friends say, and I did not realize this was an old Chinese proverb, but the best time to plant a tree was 20 years ago. The second best time is today. Well, I got a small take on that. The best time to fix your W-4 was before the year started. The second best time is right now, whenever that is. Want to avoid the April aftershock? Hang on and I'll show you how. Okay, so we're going to cover three options that you have for completing your W-4. And for purposes of the example and to try to kind of weave some parallels throughout, we're going to use this set of circumstances. First off, we have a married couple, Mickey and Minnie Mouse. Come on, I had to get cute with it, right? Okay, Mickey and Minnie, they did ultimately get married. In fact, they got a couple of kiddos. By now, they probably got great-great-grandkids and have passed on, but we're just going to stick with the example, okay? So Mickey and Minnie married filing jointly. Minnie gets paid every 2 weeks and makes about $68,500 a year. Now, the reason I said every 2 weeks, because listen to this next one. Mickey gets paid twice a month and makes $57,900 a year. Now, for those of you saying, well, that's the same thing. It's not the same thing. Somebody gets paid every other Friday, for instance. They're going to get paid 26 times a year. Somebody, because there's 52 weeks in a year, right? So 52 divided by 2, 26. And for somebody who wants to get really technical out there, is there a possible way that they could get paid 27 times in a year? Yes. But don't get into the nitty-gritty details with me on this, okay? And the only way that happens is, like, for instance, if they get paid every other Friday and the first of the year is on a Friday, which probably they're not getting paid that day anyway because everybody's closed, but you get my point. I digress again. So anyway, the person that gets paid every other week, every other Friday, for instance, is going to get paid 26 times a year, whereas the person that's paid, for instance, on the 1st and the 15th, or the 15th and the end of the month, or I know some companies that do 7th and 22nd, whatever that case is, if they're only getting paid twice a month, period, end of story, there's no way that they're ever going to have a month where they get 3 checks. Then how many times are they getting paid a year? 24, 2 times 12, right? So 24 months out of the year. There's an important distinction here. We'll get into it later, but I just want you to be aware of what we got going on there. They do have 2 children living at home. Jenny just turned 18. Ricky is 15. See what I did there? Minnie, Mickey, Jenny, Ricky. Yes, I made these kids up. I have no idea if in the real life cartoon, if they actually had kids. This is what we're going with. On top of the 2 jobs, Mickey drives for Uber, and he profits about $500 a month. And together they make about $500 a year in interest and dividends. Okay, so that's going to take us into our scenario that we're building. Okay, now the first, or not scenario, that is the scenario that we're building. The first option for getting the W-4 completed is a manual option. Okay, and just so you know how this whole W-4 thing is laid out, they really want you to do the hard work on the person that makes more. The easy work, so to speak, is on the person that makes less. There's an assumption here that they both make roughly the same and not very dramatic differences. Keep in mind, this W-4 changed in 2017 with the Tax Cuts and Jobs Act, and it just got a lot different. It was supposed to be simplified, and it kind of is, in that you can just put your name, your social, check a few boxes, and that's it. But now there's some weird distinctions in there about, am I doing this for myself? Am I doing this for both of us? Do we put the same thing together for both? What do you do? There's still ways we can manipulate it. I'll get that when we get down to the option, the third option that you have. In the old days, you could kind of manipulate with, we knew $135 extra in one blank would yield an extra dollar here or there or whatever, and you just don't have that anymore. Okay, so for the purposes of filling this form out, we're just going to do Minnie since she makes more. Okay, so literally from the IRS website, I can download this W-4 PDF in a fillable form, and I can come in here and complete it myself. And we're going to say she lives on 1 Walt Disney Road, Walt Disney Drive. And that's what we're just going to say they're in Orlando, even though there's the big fight there right now, right? And I don't even know. We're just going to say 33333. I know they're in the threes. I don't know what it is. And I'm obviously not going to put her actual social security number on here, but we poke that in, and there we have it. And I did mention they are single or married filing jointly. We're going to go with married filing jointly, obviously. Now, I'm going to stop right here and address if we're doing this for your kid that's got a job, okay? Somebody that's never owed taxes and that's not anticipated that they'll owe taxes because their income is such that they don't have taxable tax exposure. So, like for this past year, the single adjusted gross income floor was something like $13,000. I can't remember actually his exact number, but basically, if they're going to make less than 13 grand, you can kind of stop right here after you fill all this in, come down here. There's no formal place for it, but where my mouse is highlighting right here underneath step 4C, and in big letters, write exempt. Okay, and this is how we did it, 40 years ago, 50 years ago when we were getting jobs. We just wrote exempt on one of the boxes. I think it was box 7 or something in the old days. Right here, you just write exempt, you sign it, you're done with it. Okay, but we're not doing that for this case. We are pretending like Minnie and Mickey are both married filing joint. So this basically what I just described is how we would fill out for Jenny and Ricky Mouse. We would come in here and we would say, hey, fill in this top section, write exempt, sign it, date it, hand it to the employer, you're done. Okay, so let's keep going then. And I'm going to read these as we go just to try to erase any questions, because I know some people are going to actually read this and go, well, what does this mean? And I just want to make sure that we can kind of iron some things out. And the very first thing out of the box after you've entered your name and address, and they tell you complete steps 2 and 4 only if they apply to you. Otherwise, skip all the way down to step 5. So the reason 2 to 4 didn't apply, and I told you right above 4C, right below 4C, right above box 5, write exempt. That's exactly what you would do. You would skip all this junk, go down to the bottom, right above where you sign, and write exempt across it, and you're done. But there are instructions, by the way, when you download this from the IRS website. If you just scroll down, there's all the instructions for each blank. Okay, but we're going to step through that so you don't have to do all that reading. Okay, so this one actually made me crack up. If you get into step 2 and it says complete this step if you, 1, hold more than one job at a time. Okay, so this is single people that have 2 jobs, or 2 are married filing jointly and your spouse also works. The correct amount of withholding depends on income earned from all of these jobs. Okay, now I did mention that Mickey is driving for Uber, but that is considered self-employment, and we'll address that later. But notice this is what cracked me up. Do only one of the following. A, reserved for future use. And most people go, well, what? I just think it's funny to lead with that. Usually reserved for future use is something you push down to the bottom. Like in this case, that would have been C, and B, A and B would have been replacing what B and C are right now. Whatever. It just cracked me up. The very first thing they tell you to do is ignore this step. We're moving on to step B. B, it says use multiple jobs worksheet on page 3 and enter the result in step 4C below. Or if there are only 2 jobs total, you may check this box. Do the same on the W-4 for the other job. This option is generally more accurate than B, meaning this using the multiple jobs worksheet. If the pay at the lower paying job is more than half of the pay at the higher paying job, otherwise, B is more accurate. Okay, that's a really confusing way to say, if you make about the same, you can check this box, and then you're only going to fill in this stuff on the higher paying job. You're going to do it one time. So the person with a lower paying job, in our case, Mickey, is going to check this box and be done and hand it, sign it, hand it off. But for Minnie, she's going to check this box and we're going to keep on rolling on through. Notice it says if you have self-employment income, see page 2. We're going to hit that here in just a minute. And I'll show you the instructions and kind of where we're going from it. But let's move on. And here's those instructions. And I'm going to move them over to the side so I can talk intelligently without having to leave the page. I screenshotted them so I could be a little faster here. All right, so we're going to continue on because we are doing Minnie's, not Mickey's. Minnie does make the higher money, and Mickey's will be left alone like this. So if your total income will be $200,000 or less, and their total income is about $126,000, $400,000 or less if married filing jointly, then you can keep reading these questions. It's so weird. They kind of leave you hanging here and then say, yeah, so, okay, if you got no kids, you're going to enter zero in both of these blanks, okay? If you've got kids that are under a certain age or over a certain age, put them here, okay? So in this case, we're going to multiply the number of children under age 17 by 2,000. Well, I told you, Jenny just turned 18, so how many is that? Zero. Ricky, though, is 15. So what are we going to do? We're going to multiply times 1 times 2,000, and we're going to put in the answer, 2,000. We did, though, still have Jenny. Jenny's still a dependent living at home. So we're going to put 500 in that blank. We're going to add the amounts above for the qualifying children and other dependents. You may have to add to this amount any other credits, any of those totals here. The other credits might be, but who knows what. If you know that you're going to have a giant solar credit for the year, you might want to finagle and put that. I'm advising most people just to let that be income in April if you want to, okay? I mean, after all, we are avoiding the April aftershock, and I'd like to stock as much up to play with at the end of the year, if you will. So right here, we're going to enter the total of these two lines. 2,000 plus 500 equals 2,500, okay? Now, other income not from jobs. And I told you we were going to get to the Uber info. This is where we're going to get to the Uber info, okay? If you want tax withheld for the other income you expect this year, and it doesn't have withholding, enter the amount of that other income here. This could include interest, dividends, retirement. Well, remember, I told you they got $500 a year in interest and dividends, right? Right. So you would put that there, okay? But what about the self-employment income? Now, self-employment, the thing about self-employment taxes is that you are paying, and we'll look at a pay stub here in just a minute. In fact, let's look at Minnie's pay stub right here. Yeah, Minnie's is okay. We can look at Minnie's. I was going to say, this doesn't tell me everything I want. You know what? Actually, let's look at Mickey's. I like Mickey's layout better because this is more of a traditional layout. Okay, if you look down here, you see federal income tax, Social Security, Medicare, okay? And self-employment taxes are really the self-employed business owners' employee taxes of Social Security and Medicare, the employee portion, okay? What a lot of people don't realize, and this actually highlights it for you, is that the employer also owes Social Security and Medicare, this amount and this amount. Now, you might think, well, that's the same thing, that they're calling out the same dollar. No, this is the employee tax and the employer tax. So when the employer withholds money to pay for your taxes, they're not only withholding federal income tax, which we reconcile on a 1040, and that's what the process of doing your tax return is every year, but they also have to pull out 7.65% of your gross pay for Social Security Medicare. Guess what? They've got to match that. So 7.65, 7.65, 15.3. Okay? So when you're self-employed, in other words, driving for Uber, making $500 a month. By the way, you're doing a lot of driving if you're making that after your expenses. But you're going to want to have, you're going to have to pay 15.3% of that. Well, let's look over here at what that is. 500 times 12 months, sorry, times 0.153. Now, this is not exact, but roughly you're on the hook for at least $900 in self-employment taxes. And we haven't even talked about the income tax piece of that, which is what federal withholding would be about. Okay. Well, the purpose of the W-4 is to account for that. And you have a couple of options. Number one, you can try to just go ahead and have it taken care of and withheld out of your paychecks at your quote unquote real job, or you can pay estimated tax payments. And that's always the option. You can always pay estimated tax payments. The IRS are more than happily welcome your payment. And we're not going to cover doing estimated taxes on this video, but that is always an option. So what I like to do here on 4A is put in not only the 500, I'm going to put that in as a placeholder. This is the interest and dividends that they're making for the year, that Mickey and Minnie are making together. But we also have Mickey's self-employment income that we want to account for on here. Okay. Now, I know that I said we're only doing Minnie's right here, but remember, Mickey's is not going to change. Mickey's, we're not doing anything down here. So we want to make sure we take care of accounting for that self-employment income on here. All right. Now, I told you I was going to pull in these instructions because it just makes it easier. this blurb right here, the exemption, no, sorry, this blurb right here where it says self-employment. This is where you're going to go, okay, wait a minute. This is getting a whole lot of stickiness. All right. What this generally says is, look, use 14.13%. I told you a second ago it's 15.3. Big, weird, crazy way of trying to get down to what 15.3 is when it comes to how you account for it on a 1040. But use this 14.13 as the number. So back with the calculator, we're going to say 6,000 times 0.143. That's 14.3%, $858. Okay. We're going to plug that in, but notice what it says down here. But if you want to pay income and self-employment taxes through withholding from your wages, you should enter the self-employment income on step 4A, then compute your self-employment tax. Divide that tax by the number of pay periods remaining in the year and include that resulting amount per pay period on step 4C. Whole lot of words. Let's see what they just told me to do. They said, first off, put that extra income right here. So we're not just putting 500, we're putting 6,500 in the additional income. And then for extra withholdings, okay, they said in step 4C, they said in these rules, they said what you're going to want to do, divide the tax by the number of pay periods remaining in the year and include the resulting amount per pay period on step 4C. All right, in our initial set of examples, Minnie gets paid every 2 weeks. Remember I said that's 26 times a year? Every 2 weeks. So when I look at that most recent pay stub, I think this was it. This is actually Mickey's pay stub. Minnie's, I don't know that it gave me a date. 7/23. Yeah, I think the pay stub was from 8/1. This just says the pay period is through 7/23. But basically, when I pull up a calendar, Minnie's got 10 pay periods left in the year to make up this difference. Okay, and I always look at this is why it's always good to do these things as soon as possible. That's why I use that analogy. You know, they say when it comes to planting a tree, the best time to have planted a tree, especially when you're looking for shade in this Texas heat, the best time to have planted a tree is 20 years ago. The second best time is today. Well, W-4 works the same way. The best time to fix your W-4 is before the year starts. Okay, but if you can't fix it before the year starts, fix it as soon as you can. Okay, so if you get your tax return done and you end up owing a lot of money and it's a surprise, fix the W-4 right away. Okay, so remember we had $858 here. So we're going to divide by 10 because there were 10 pay periods and we were told to divide by 10. So we want at least an extra $86. You don't put decimals in there. We want at least an extra $86 withheld every check. Okay, for the checks that are coming. I didn't really go into deductions, but this would be where if you're going to exceed the amount of the standard deduction, then you want to put that in here. So I believe the standard deduction for them for 2023 was going to be, I've got it right here, 25,700 or 27,700. 25,900 was this year and doing the 2022 taxes. So for 2023, it's 27,700. That just means if they're going to have medical expenses, God forbid, that push 7.5% of their adjusted gross income and exceed that amount, then you're going to want to put that in here. But it's got to get above the threshold of 27.7. Otherwise, leave this field blank. And I don't want to get into that discussion right here because it's a very heavy and lengthy discussion. And this then pretty much handles everything that you need. Now, notice I did not go into the multiple jobs worksheet on page 3. We totally could. What that helps do for you is to, especially when there's a disparity in income, if you step down here and just kind of follow through the guides, if you have 2 jobs, you're married, filing jointly, there's a way that you can come in here and say, look, use the higher paying job and the lower paying job column, find the value at the intersection of the 2 household salaries and enter that value on line 1. Notice they said if you got 3 jobs, remember Mickey's Uber is not the 3rd job. But But that would be if one of you is working a full-time job and then, flipping burgers at night or something like that. So I said she makes 68.5, he makes 57.9. We're going to come down here. The higher paying, hold on, I got to remember what it said, because this is an instruction you can really get goofed up on. The higher paying job row and the lower paying job column. Yeah, there we go. It does say lower right there, doesn't it? So 68.5 is this. And then you're going to come along here against 57.9, which is right here. 47.50 is our number. Okay. So 47.50. I said we're not going to do anything with the third job because we don't have one. Enter the number of pay periods per year for the highest paying job. For example, if that job pays weekly, it's 52. It's every other week, 26. Monthly, enter 12. Semi-monthly, it's 24. I don't know, etc. Every other day. I don't know what they were going for there. But in Minnie's case, our example was that that she gets paid every 2 weeks, and this is hers that we're filling out. So we're going to say she gets paid 26. And then you're going to divide this 47.50 by 26. Okay. So 47.50 divided by 26, 182.69. And what it's going to want us to do, I'm just going to round this up to 183 instead of 182.69. It wants us to enter that here and on step 4C for the W-4 of the highest paying job. Remember, Mickey's job is not going to be on here. Oh, yeah, there it is, the 27.7 I talked about earlier. So 183, they're saying to put in 4C. Well, we already got a number there. Well, we got that number there because we got that from his self-employment. So you're going to want to add that 183 to the 86. Okay, so 183 plus 86 is $269. That's what's going to go in here. That was why we hadn't gotten to that part yet, and I wanted to make sure that we covered that here. Okay, this is option one for you folks that are DIYers and want to know how all this works. Okay, now give me just a minute, and we're going to do option two. Okay, option two, the long waited for, just kidding. We're going to use the IRS website, the Tax Withholding Estimator. Okay, I'll put this link in the notes for the show or for the video so that you'll have it. But by and large, this is an option for you. It can get a little tricky, and it does tell you a couple of caveats down here. How it works: you estimate your federal income tax withholding, you see how your refund, take-home pay, tax due are affected by the withholding amount, and you can choose an amount that works for you. This is them telling you the W-4 is not a binding document. It's not something you file with the IRS and you're going to get in trouble for if you do anything wrong. It is a tool for you to pay them. Like I keep saying over and over, it's a tool for you to pay them so that you don't have the April aftershock. Okay. It does even warn you, don't use this tool if you have a pension but not a job. It's not going to help you. Okay. You can't use this if you have non-resident alien status. Instead, you've got to use a supplemental form to the W-4. And if you've got a complex tax situation, okay, look at what they call complex. Long-term capital gains. I mean, you're selling stock that's over a year in length, or you got qualified dividends. Okay, probably not going to work for you as well. Okay, but if it's pretty straightforward, you got everything going on, W-2 related income, maybe a little bit of a side hustle, that kind of thing, you can use this by and large. Okay, so we're going to go click right in here, and guess what? We don't have to enter any personal data. And some of you that are tech geeks are going to say, yeah, but they know what they know what website you're coming from or whatever. They can track you by IP address. Look, there's plenty of ways for them to track you down, so I'm not too worried about that. All right, so we're going to click on here because they're married filing jointly, and look at, by the way, best describes, I'm not going to gloss over this too fast. Select the information that best describes how you anticipate filing your 2023 tax return. All the fields that are marked with an asterisk are required. So, married filing jointly. Do you or will you or your spouse have a job that regularly withholds federal income tax from your paychecks? This is a way of them saying, do you have a steady job that's going to cut you a W-2 at the end of the year? Okay. And by steady, I don't even mean that's not anything derogatory. It's just, are people writing you checks just for showing up every day, or day labor style, contract labor style, or even Uber style, to where they're not withholding any taxes? Or do you have one of those standard employee situations where they're paying you and withholding your federal income taxes, your Social Security, and Medicare. In our case, both of them have jobs that have withholdings. Okay, select any of these things, then apply. They plan to claim dependents on their tax return. We got Jenny and Ricky. Let's not forget them. So yes, we're going to claim them. Even though they're probably 165 years old, we're going to pretend like these folks are not 65 yet. And all that does is invokes the extra additional standard deduction, by the way, just so you know what that box will do. If either person is over 65, then the standard deduction gets increased, okay? As does whether or not the person is blind, okay? And then here you just want to make sure that they're not claimed as dependent on somebody else's tax return. This is how a child could go in and figure out what they need to do, by the way. You could literally come in here and go click single, no, this, and then you're done, okay? So we're going to hit next. Income and withholding. Enter information for each job you will earn income from this year. To use this tool, you need to have a job subject to tax withholding. If you have Social Security or pension income and you prefer to have tax withheld from your job to cover that additional income, select 2 or more sources of income and enter information for your first job. After that, you'll be asked in your Social Security and pension income. Okay, so first income source. And we're going to go ahead and put hold on a minute. Enter information for each job you learn. Oh, this is actually just for one person. Okay, so yeah, let's do it that way. So this source of income is salary. Yep, I'm going to go ahead and hit 2 because now I see the question. I forgot that's when they add the myself, my spouse. I thought I needed to do that somewhere else. So anyway, this income is for myself, and the best describes when you earn income from this job all year, January through December. Okay. Note the options here. I currently hold this job, but only for part of the year. I've had this job earlier in the year. I do not hold this job yet. I expect to start the job later this year, whatever. Then down here, how frequently are you paid? Weekly, every 2 weeks, twice monthly, or once a month. That's the only 4 options they give you, okay? Fortunately, by and large, most folks are paid in one of these top 3 ways, usually these middle 2, okay? But we're going to click on every 2 weeks because many gets paid every 2 weeks at $68.5. Using your most recent pay stub, when does your most recent pay period end? Okay, so let me pull that back up here. I'm going to actually slide this over on the other screen because I can see it, and I'll move it back and forth, okay? So this pay period, and I'm always very careful about this, okay, because even if I put July 23rd, like it said on the statement, if many didn't get paid until August 1st on that, some people pay like a week or 2 later, all right? So you'll want to look at pay dates here rather than looking at the actual end of the pay period, okay? That's one caveat for this. And just for safety's sake, because I did say August 4th was the most recent that we had, I want to use that one because that's what I did on the other statement that we filled out. Enter wages or salary for pay period. Well, I'm looking here at the pay stub and, oops, hold on. I got to pull this. I'm going to try to pull this over where everybody can see it. And it's not wanting me to bring that over. Here we go. So the earnings for this pay period were $2635.50, and just trust me that these are the amounts I'm going to put in. $2635.50, and then wages or salary year to date is $838.15. There's a little bit of overtime in there. Based on the information provided, it looks like your expected annual income $64,193. Is this correct? Yes. As long as that sounds about right, we're good. Okay. Enter federal taxes that are paid per period. So this time, 282.14, we are only taking federal income tax line. You do not put Social Security, Medicare numbers in here. Okay. And then this will tell you how much has been withheld year to date, 2345.97. Select any that apply for this job. I contribute to a 401k. And by the way, there were no deductions of any type on here. So I contribute to a health insurance savings account. No. I am getting a bonus. No. I got a bonus. No. None of the above. So we're going to select none of the above, and then we're going to enter the second income source. Same kind of deal. We're going to say that they where'd it go? There we go. So it's also a salary job. Income is for spouse, and spouse has had it all year. Spouse is paid twice monthly rather than every other week. This one looks to have been paid, um, I believe, on July 28th. Wages or salary per pay period looks to be total earnings 1569.92 and the wages or salary year to date. And scrolling to get that number, looks like 34 154.27 154.27 based on the information. Looks like your spouse's income from the job is 49,853. It's a little bit on the light side, because there's some base salary involved. So if this ever looks incorrect, you know what the year to date number is coming off of the pay stub itself, 34 154.27. But remember, in our scenario build earlier, I told you that Mickey makes about 57.9 per year, and we're about $10,000 off from that. Okay, so a lot of times what I will do is I'll say, okay, this probably needs to be adjusted, and let's just see if that gets us right there. It's a little bit too much. I will play with this number if I know that something's goofy. Like, for instance, people that have a base salary but get paid a commission on top, something like that. And this is very close to the number. And again, we're just looking for close, not exact, because I guarantee you the year-end number is not going to be exactly what we punch in here. Based on the information, it looks like we're going to say that's correct. So federal taxes paid for pay period. This is another one of those things that's a little bit, when you got somebody that's got a base salary and also has some withholdings, that can get a little slimy too. So we're going to say that the current deductions match what they'll normally have withheld, 345.38, and the year to date federal withholdings has been 3280.48. Now, Mickey, and I did not spell this out, Mickey actually does have some healthcare savings. And right here, in our amount per pay period. And so this is where you would say, okay, now I'm looking right now to see if they've had any deductions like this in the current section. Nope, that's all been year-to-date deductions. So actually, sorry, looking over here, and I realized on our sample pay stub, because I am trying to get this to dial in as close as I can, that this is all year-to-date deduction. There are no deductions in the month-to-date, or sorry, in the current display. So apparently, Mickey got off health coverage. So we're going to uncheck that. Spouse isn't getting a bonus. Spouse got a bonus, whatever. So we're just going to none of the above on this as well. Do you have any other source of income? And remember, we're going to count Mickey's spouse's net self-employment income. And we said that was going to be $6,000, right? We also have investment income. And the interest, sum of interest and dividends, $500. We're not going to say any of them are qualified dividends, which they might be. Qualified dividends just means they've had it for a holding period. And no withholding from any other sources of income, no estimated tax payments. Click next. Are we doing any kind of self-employed health insurance? See, the options are really pretty nice right here, because you can do a lot of things that doing the form by itself doesn't really offer you the opportunity to do. So all these different possibilities for deductions, really good stuff. Okay, we're going to say none of those because we didn't do any of those adjustments earlier. And then we're going to say to use the standard deduction. Remember earlier I didn't have any excess deductions. It gives you a little bit of note here about if you have other things you may want to estimate in here. Right now, we don't have any reason to believe any of our deductions are going to be any higher than the 27.7. And then you have this QBI deduction of 1115. Sure, keep it. I don't want to change it. That's all this is saying is, do you want to keep it or change it? So we're going to keep it. We're going to hit next. Enter the age your child will be on December 23rd. So I told you we got one kid that's 18. and we got another kid that's 15. Notice you can put child care credits. So remember I told you earlier, any additional credits that you might have for child independent care, for earned income tax credit, any of these other credits. Notice there are a lot of them. Okay. We're going to hit next, and that's it. And then here's your results. Projected refund of 1,081. And then you can adjust your withholdings, and it goes through here and it tells you what adjustments you could potentially make. So let's zip up to the top of this page and kind of go over everything. Okay. And notice they got a little cute little print button that you can print this thing out. This is the projected withholdings for the year if you made no changes and you don't submit a new W-4. So basically what they're saying here is the W-4 that is in play right now for your current pay stubs that you provided and all the other information that you provided, this looks like you're going to be okay, and in fact maybe even have $1,000 refund. Some people don't want refunds for any wide variety of reasons. I know some of you are hearing that and aghast at the thing, but if you're going to get $1,081 refund and you don't want it, and I always tell people, listen, don't use the IRS as your savings account, okay? And it falls on deaf ears a lot of times, but at the same time, that money's worth more to you right now in your pocket than it is down the road, right? So if you come down here and you say, okay, what do I got to do to get zero? I want zero. I want no refund. In fact, I wouldn't mind owing just a few $100. That'd make me feel okay. Keep in mind, I always said earlier, I want to save some of those credits. Well, if you think those credits aren't going to come back to you anyway, for whatever reason, perhaps, here's the deal. Sometimes some of you are on a payment plan with the IRS, and it does you no good to have a refund because it's going to get zapped anyway. So here's an option. Turn this down to zero and live on your money now and let the IRS just get its general refund not get its general refund. Let the IRS just be happy with the payments that you're making them and live on your W-4 or W-2 money now. You can literally slide this bar all the way down to zero and say, this is what I want. Your first job annual pre-tax wages are this, to get your desired refund amount, you will need $270 withheld from each paycheck, $12 less than your current tax withholding. You can submit a new W-4 that resets your withholding to standard withholding if lines 3 through 4C are blank or zero. Your standard withholding is $152 per paycheck based on your filing status and income. The recommendation for adjusting your withholding to get a refund of zero will be based on the standard withholding amount, not your current withholding. And then it tells you on this little plus sign how to do it. You can literally go online and do this, and it tells you exactly what to enter in all those fields. So remember, we had this going on. Let me see if I can bring this over. We had this thing going on here where we said all these things and do 269 of extra withholding. It's saying, hey, instead of 269 being in that field, you just want to put 119 in this one. And looky here. Then they say the second job annual pre-tax wages are this. Standard withholding is 132. The recommendation for adjusting withholding to refund is zero based on standard withholding amount. How to adjust your withholding? Enter 104. So now look, Minnie's doing 119, Mickey's doing 104, and that's it. So instead of you having different, each of you having a different W-4, you're actually now both filling one out. We would have one of these for Minnie and one for Mickey. Minnie's would have 119 right here. Mickey's would have 104 right here. And then we're done. Okay? So I mentioned at the beginning, and this has already been an extraordinarily long video. What's the third option? Third option is have your accountant calculate it when they do your tax return. What? Yes, we can do that. Almost any tax software out there. In fact, I'm pretty sure that the do-it-yourself tax softwares have it out there. What do you need to provide us? The year-to-date pay stub, just like we showed you Mickey and Minnie's. Give us a year-to-date pay stub as fresh as you can to the time that we are calculating the return. Now listen, things get bogged down in CPA practices and EA practices alike. Any tax prep office, things can get bogged down. What do you want to do? Give us a pay stub at about the time we were doing the tax return. If there's a delay, like you submit your documents and it's taken us 3 or 4 weeks to get to it, there's stuff happening there, especially at the beginning of the year, where the pay stub matters. The number of pay periods, as you saw in our example, matter. We want to have the most current information to our hands, and then we can load it into our software, and it's going to tell us the same information is going to dial it in real tight. The other thing to do, just like you can go plant a tree 20 years ago and do your W-4 at the beginning of the year, have another check on it late in the year. This is what the end of year tax planning routine is all about. Call your accountant, say, hey, I'm going to send you my most recent pay stubs. Can we get a look at where we're going to come in? Again, always, always, always trying to avoid the April aftershock. And that's pretty much your three options. Okay, so that's all I've got for you this time around. Listen, like I said, big in-depth video, 39 minutes long. But listen, do please, if you do watch that video, or you're watching or listening to us right now, wherever you're at consuming this content, please like, subscribe, comment, and obviously if you have any questions, like always, please feel free to email them at podcast@timthompsoncpa.com. That's podcast, podcast, at timthompsoncpa.com, and Thompson has a P in it, by the way. Obviously, you can check us out on our website there as well. This will be posted as a blog article there. And that's all I've got for you this time around. I wish you the best of luck avoiding any future April aftershocks.